Welcome back, everyone, to NYU Grads Daily Podcast on stocks and finance. Today is Monday, January 22nd, after market close. Hope you all had a great weekend. Let's jump right into the numbers here and start off with breadth numbers. So we had very bullish 1,051 new highs today and 292 new lows. So a very bullish day. We had 70% of shares advancing versus 25% of shares declining. When you take a look at the 50-day moving average, 31% of shares are below its 50-day moving average, and you have 36% of shares below its 200-day moving average. So all quiet on that front, nothing remarkable to report there. When you take a look at the Magnificent Seven, Tesla is still struggling here. It was down 1.6%. Apple was up 1.22%, but the remaining Mag 7 were actually red, but not a whole lot. Like Microsoft was down 0.54%, Google was down 0.18%, Meta was down 0.4%, and Amazon was down 0.36%. But a lot of the names in the riskier groups like tech, as well as like the Russell 2000, were up handedly. I'll go through some of those. And then you had healthcare shares up, all in the green today as well. Let's look at sectors today. So the leading sector today was industrials, then you had financials, then real estate, and technology was fourth. On the red side, or to the downside, you had consumer defensive and utilities in the red, and consumer cyclicals also in the red today to start the week off. I did want to mention that this morning I did post on Substack Notes, as well as sent an email to pledgers of the Substack. I did initiate a trade this morning on a tech name, and I already closed out of it today. Made a small profit. It was breaking out initially out of a balance range, and it looked very bullish. But then it started to pull back, which is fine. Typically what will happen is prices will break out of a balance area and then backtest, and then either backtest and go higher or backtest and fail. And it started to fail. I closed the position with a small profit and moved on. So the pledging group knew exactly the trade that I was getting into and why. If you are interested in seeing some of this content, all you would have to do is, once you're a subscriber, you would then pledge to the Substack. It's very easy to do. It's a two-step process. You would subscribe for free, and then the subscribe buttons become pledge buttons. There's no charge right now because I haven't released a premium offering, but I plan to very soon as we approach 3,000 total subs. Additionally, one of the barometer readings that I study is still flashing a red warning, basically to either be cautious of your longs if you are already long, or if you're in cash, to not initiate new bull positions unless you're very short-term oriented, like you're going to get in and out with tight stops, and you have disciplined sell rules. But it's a very risky time to go long right now. And then it also is signaling if you're going to go short, because it potentially could be the very beginning of a change in momentum from bull to bear, you're going to have to babysit your short entries, right? You might get stopped out a few times, but it's not worth going bearish on the position and then just holding it with very loose stops, because the bull train is still moving forward. One of my premium indicators just saying, hey, be careful, we're a little bit too overbought here. So that's just a quick housekeeping item on the differences of some of the content that you'll see from free and premium. A couple other things that stood out to me, I can't not talk about Bitcoin. Bitcoin itself is down markedly since the Bitcoin ETFs have been approved, but it is now breaking long-term support of a long-term trend line, as well as 40,000, as well as the 50-day moving average. Now, if you take a look at some of my previous posts, I noted that every time Bitcoin broke down below the 50-day, it then proceeded to test the 200-day moving average. And that even if we go down and test the 200-day moving average, which is like at 34,000, we would still be in an uptrend, meaning that in the long term, damage would have been done, but not enough to stop it from going from a long-term downtrend. So very risky times here for Bitcoin shares. I did initiate today a short Bitcoin position through the ETF BITI. That's kind of just a freebie for everyone. It's fairly liquid. You can get in and out of. But again, this is not financial advice. You should consult with your financial advisor and research options and ETFs before you do anything. I'm just sharing my observation. Right now, Bitcoin is trading at 39,925. It actually went as low as like 39,200, I believe. If it can't rally here and recover the 40,000 mark easily, my hypothesis here is that Bitcoin is going to go test its 200-day moving average, which exactly is right now, as of Monday, January 22nd, is at 33,483. So that would be a considerable drop from where we are now at 40,000 and change. That is my hypothesis, but I have a very tight stop. I am babysitting this entry because, Bitcoin can rally easily to test to the upside the 50-day moving average again, but we'll see. So keep an eye out for that as well. It's really all about staying focused right now because there's so many cross currents. Everyone is saying that rally is on. If you look at semiconductors, that is the bull market right now. NVIDIA, AMD, Meta, which is basically saying they're gorging on NVIDIA AI chips. But when you take a look at the ratio chart of SMH, which is semiconductors, compared to the NDX, which is the NASDAQ 100, you would have to go back to the dot-com bubble for this ratio chart to be where it's at. We're approaching that level right now. And if you look at SMH over the SPY index, we are there at 2000 dot-com bubble ratio. So very dangerous time, risky time to initiate new long positions here. With that said, it has cost a lot of money supply and printing to get back here, which is also concerning to me as well. I think the sell side is underreporting some of the commercial real estate headwinds. Also, this big overhang of the rate decision at the end of the month, January 31st. And you also have potential BTFP expiring in March, the beginning of March. So a lot of headwinds here in addition to tailwinds. So it's super important to stay focused here and not get over your skis. But let me just kind of go through what was strong today on my watch list. So you had Carvana up 7.65, K. Hovanian, the home builder, up 7%. It's huge numbers here. You had AI up 6.5%. Affirm Holdings, the buy now pay later, up 5.16%. Sprout Social up 4.9%, Synopsys up 4.7%, Wayfair up 4.7%, Roblox 4.63%, Tark Investment, which is the bullish ETF for ARK Innovation Fund, up 4.48%, Instacart up 4.4%, Yext YEXT up 3.77%, Rivian up 3.5%, Kava up 3.4%, TriPoint Homes up 3.3%, MongoDB up 3%, Pulte Homes up 2.99%, Marathon Digital finally bouncing here at 2.98%. So you get the picture. A lot of risky companies are bouncing hard today. On the weak side, you had PayPal down 3.16%, Sweetgreen down 2.45%. You had MicroStrategies, Michael Saylor's company, down 2.25%. Silver, SLV, down 2.18%. Las Vegas Sands, down 1.88%. ARM Holdings, which is a chip company, down 1.87%. That's kind of weird that a chip company is down, but they IPO'd recently. Tesla down 1.6%, DoorDash down 1.5%, Kura Sushi down 1.5%. So that was kind of overall picture of today. What to keep watching. You have, as I mentioned, at the end of this month, January 31st, the last day of the month, FOMC Fed rate decision. Keep watching the Mag 7. Keep watching Tesla. It just seems like it wants to go lower. Watch the 10-year yield. It's sticky here. It's not crashing. It's trying to fight back. And we are in the earnings season, so you have a few big names coming out on Tuesday before market opens. You have Procter & Gamble, J&J, ServiceNow, Verizon, GE. After the close tomorrow on Tuesday, you have Netflix, Texas Instruments, CSX, which is transportation. On Wednesday, you have, after the market closes, Tesla, Visa, Lam Research, ASML, which is all semiconductor, IBM. Thursday, you have Intel after the close, T-Mobile, Capital One. And on Friday, you have American Express in the morning. So a couple important names are there. But again, I don't think earnings matters as much as the Fed rate decision at the end of the month. So let's see what happens tomorrow. I'll see you all after the Tuesday session. Have a great day.